This is Osprey from MyChartCoach.com, and in this video we're going to take a look at the indices. We're going to take a look at some of the ETFs and yeah, volatility. So first up, let's take, and we're going to look at treasuries. So first up, yeah, this is the futures. This is the future quotes here, and tonight, as you can see, the indices are under pressure slightly. You know, they're slightly red. You've got VIX that's up, currently green, and so yeah, there was a big down day for the markets today, and that was forecasted yesterday with that Tuesday. You know, everything was cooked and everything was set up for a down day today, and so that did follow through. The U.S. Treasury note here, as you can see, it was down. It was spiked up today. And so it had this huge spike up to this 91.4 level, and then it's leveled off a little bit at 90, but it broke out higher. It had double topped yesterday around 286, and so that big breakout that's what sent the markets tumbling. And then as you can see, the same thing happened on the 30-year Treasury. You know, it's slightly up this evening, but as you can see, you know, it made a big spike today. You can see the big spike higher. Yesterday it had formed this double top, and then it ended up you know, breaking out today when the Fed was speaking. So that you know, having the potential of 4 interest rate hikes this year, you know, made the market skittish, and it sent the 30-year pushing. And as you can see here on ticker symbol TNX, this is the 10-year U.S. Treasury yield. It bounced today off of the middle Bollinger Band. So you can see the setup yesterday that we discussed was the 3-day pullback, and it was hitting that middle Bollinger Band at 2846. And so it bounced off of that level, and then notice it closed back above EMA's 4, 8, and 13. It's back above the pink line, so that signals that the chart is cooking again, and you know, the uptrend is still intact. And so the big level to break is going to be this closing price here on the 21st, and so a close above that level is going to be a signal that it's breaking out higher. I mean, this is pushing very high levels. You know, the TNX hasn't seen these levels in a very long time, so if it breaks out and makes new highs, that's going to be a red flag for the markets. Now, if we look at TYX, this is the 30-year U.S. Treasury, and you can see here, you know, notice it's got the bullish crossover here, but you know, and the crossover here on 80X, so it's heating up. And then this had the bounce off of EMA 13. It had the 3-day pullback. It held EMA 13 just like it did on the other pullbacks, and then it bounced off, and then it closed back above EMA's 4 and 8. You know, there was some profit taking off of 32. This 32.20 level is the big level to break. You know, the closing price on the 21st. If you see it above 32.20, that's going to be a signal that you know, it's heading higher. I mean, it seems unlikely with 4 rate hikes possibly coming this year that it's going to you know, be going down. You know, you got to think that the trajectory is going to be to the upside. It's just that the markets have to be able to get used to it. It's going to be interesting to see how long it takes for the markets to shrug this off, okay? And it could shrug it off tomorrow. You know, you never know. It's been very difficult to predict and anticipate what's going to happen next. You know, Tuesday though, it seemed like that was an easy call for Tuesday. Everything was cooked on Tuesday. Just remember, if markets or equities are up on a Friday and then up again on a Monday, they're more than likely Tuesday is going to be the profit taking day. And so this was super cooked in with the 3 days up in a row, the huge gains, the 400 you know, point days, and then having the Fed speaking. You know, it was just all in the books that it was going to be red today. And so look at the Dow Jones Industrial Average. You can see here a big red candle formed today. And notice there was the gap up open between Friday and Monday, and so today a bearish reversal pattern formed, bearish engulfing, which is a very strong reversal pattern. Many times when this pattern forms, there is follow through to the downside. It signals the bears were really strong into the close. Now, if it drops down to the bottom of this gap here, you know, that would, you know, so you'd be looking for a potential gap fill on a pullback. You know, if it came down and tested that 50-day simple moving average at 25,271, it could bounce off of that that level and still maintain this bullish uptrend. You're going to know if the Dow Jones Industrial Average is going to fail with this. It's attempting to make a new uptrend right now, and you're going to know if it's going to fail by whether or not the dotted purple line and the green line hold. If it gets back below both levels and drops down below this 25.092 level, that's going to be your big red flag that this new uptrend's not happening. If it stays above 25.271, you know, that's a signal that the uptrend is still intact, and so that's going to, you know, so that's what it's all coming down to right now. So keep an eye on 25.271, and so if you look here at the 15-minute chart for the Dow Jones Industrial Average, you'll see early in the day it broke down below the middle Bollinger Band, the dotted purple line, and that level turned into resistance, and then it broke below the 50 simple moving average here at 2 o'clock, and then it got really cooking to the downside. They were selling off hard into the close. Notice it closed here at low of day. You know, the last trade of day was low of day. Check out the huge volume spike, and then just below is the 100 simple moving average at 25363. That's the next big level to bounce off and hold. As you can see here, at just above 25,300 would fill the gap between the 23rd and the 26th. So you know, did people load here for the bounce, or were they just dumping really hard into the close, expecting a bigger pullback today? It's hard to read. You know, the SPY, you know, S&P, the SPY was up after hours. You know, VIX was down. You know, it looked like they're hinting at that they want to bounce, but as you can see, you know, futures are down tonight, and so it's going to be interesting to see how this plays out, whether or not they bounce it or if it ends up pulling back further. Now, if it drops below that 100 simple moving average, that's going to be a red flag. You're looking for the gap fill, and the next big support level is going to be all the way down here at the 200 simple moving average at 25240. Okay, so we'll see if they're going to be dropping this all the way down, you know, and hitting that 300 simple moving average again, or if this is going to be a quick bounce off of the 100. You'll know if it's bullish again if it gets back above the middle Bollinger Band and the 50 simple moving average 25619. If you see it above 25,620, that's going to be your signal. Okay, the chart's you know, turned around and now it's looking bullish again, because it's trying to start a new uptrend. That's the big head fake here. You know, the candles just got above the middle Bollinger Band on the daily chart. It's trying to get a new uptrend going, but if it pulls back below, it's going to be a signal it wasn't ready to go. And so let's look at SDOW. This is the ultra short Dow, and as you can see here, it had a big bounce today. It did form the bullish engulfing reversal pattern, so that is a strong reversal pattern. As you can see, the candles are still below EMA 4, so even though it formed a nice reversal pattern today, it's still very bearish. It's still in a bearish downtrend. It's forming candles below EMA 4 resistance and below the middle Bollinger Band on the daily chart. So it needs to get above the EMA 4 at 1735. So what bulls are looking for on this play is confirmation with the white candle and a close above 1735, and that would be a signal that the SDOW chart is bullish and it's following through, and that there's more upside. Once it gets above the middle Bollinger Band, currently at 1823, that would signal a new uptrend is starting. Notice it's lined up with the 50-day simple moving average. Like I said, bullish engulfing reversal pattern formed. Yeah, if you look here at the SPY, SPY, let's see here. Did I lose it? Here it is right here. Okay, so this is the spider at S&P 500, and as you can see here, it formed a big red candle today. So it formed bearish engulfing. It did fill the gap below, and so as you can see here, it formed bearish engulfing reversal pattern, and so this is a strong reversal pattern, and so it's signaling possible downside risk. It's holding EMA 4, so it's still, you know, holding a bullish level on the charts, but the candlestick pattern is signaling that it could pull back further. And so if it drops below 274.50, that's going to be your red flag. It could drop down here and test that 50-day simple moving average in middle Bollinger Band. It has to stay above 271, that middle Bollinger Band, or else, you know, this uptrend isn't going to happen. If it stays above 273, that would be bullish, okay? And it would be very bullish if it stays above 274.50. If you see it drop below 274.50, that's a red flag, and it'd be a very big red flag if it dropped below 273. If you look at the SPY 15-minute chart, you can see here after hours it's trading at 275.30, and so that would put it right up here above the bottom of the gap. But as you can see, it's still well below, you know, the high of day was way up here. It's still at the bottom of the chart, even though it's bounced after hours. EMA 4 at 27 at 275.06 is the big level to hold tomorrow. So it's currently above that level after hours trading. You want to see it stay above 275 if you're looking for a reversal here, and then what's happening is it's bouncing off of the 100 simple moving average at 274.55. If that level fails to hold, then it could drop down to the 200 simple moving average at 273.64. Okay, once it gets back above the middle Bollinger Band in the 50-day simple moving average at 276.76, that's when it can get an uptrend going. Now if you look here at the SPXS, this is the S&P 500 bear 3 times. This had a bounce today. It closed up 4%. As you can see, there was a bullish crossover down here in SDOW. It needs to get above 20. Basically, it formed a bullish engulfing reversal pattern. So it formed that same strong reversal pattern. The bear ETFs are signaling upside potential, and the NDCs are signaling downside risk, but they all have to follow through. And so notice it closed right at the pink line. It's right at EMA 4 at 26.87. It's below that level. Was closed below that level in after hours trading. It was in the 2670s, but if you see it above 27, that's going to be a signal. Okay, yeah, this is ready to push higher. And then the big level is going to be that middle Bollinger Band at 2810. Once it gets above the middle Bollinger Band, like this candle right here, that's when it could get a new uptrend going. But if candles are forming below EMA 4, that does make it a risk to hold overnight. Like I said, it formed the bullish engulfing reversal pattern. If you look at the SPXS 15-minute chart, you could see how it heated up today. It had been in a downtrend, and then this morning it got above the middle Bollinger Band, and then once it got above the 50 simple moving average here at 145, that was the big clue that, okay, yeah, this is ready to head higher. Alerts were put out, and it did push all the way into the close. It hit up here at the 100 simple moving average. That's the next big level to break. That's 26.86. It has to get above that level, and then the 200 simple moving average at 27.14. Once it's above both those levels, that's when it can run all the way up to 300 simple moving average at 28. Notice the gap filled over here. So now this gap's filled, and it needs to stay above the top of the gap. Many times the top of the gap will be a big resistance level, and also the 100 SMA. It was strong all the way into the close, holding EMA 4. If it drops below EMA 4, that'll be a signal that it's cooling down. As long as it stays above the 50 simple moving average in the middle Bollinger Band down here at 2620, 2630, that's a signal that the chart is still intact. Okay, now let's look at Nasdaq. Nasdaq had a big pullback today as well. As you can see here, it formed a bearish reversal pattern. It had the big red candle, and notice the red was on volume spike, and so volume increased today on the down day. That's not what bulls want to see, and it formed bearish one black crow reversal pattern. So there was a slight gap down open, and then it ended up closing below yesterday's open. So that's a big red flag. Yeah, it opened slightly below yesterday's open, and then it closed down here. It filled the gap as well, and so this gap is filled, and then it's bounced off of, or it closed low of day right at EMA 4 at 73.26, and so that low of day close is signaling the bears were strong all the way to the last trade of the day. If it drops below EMA 4, then you're looking at EMA 8 at 72.75. The Nasdaq has been super strong. Technology's been really hot. If EMA 4 breaks below and there's a close below, as you can see, it's been holding ever since the 12th of February. So a close below EMA 4, it closed right at that level today, and on this candle right here, a close below would be a bearish change in trend. Just be a change in trend signaling that there could be consolidation. And then as long as it holds 71.60 and 71.80, this new uptrend's intact. If it drops below that 50-day simple moving average, that would be your big signal that it's cooling down. Okay, now if you look at the Nasdaq 15-minute chart, you can see here how it came down and it filled this gap. There was a gap between the high here and the low here, and so the gap got filled, and then it closed right at that 100 simple moving average at 73.27. That's the big level to bounce off. The indices all pulled back to this 100 simple moving average level. If they drop below, that's when you're going to see that drop down to the 200 simple moving average at 72.95. If it can get back above EMA 4 at 73.45, that's when you're going to see the bounce start. Notice the candle candles were below EMA4 for the last few hours into the close, and then once above the middle Bollinger Band, and then up above the green line, the 50 simple moving average, above 74. That's when you're going to be seeing the reversal start. Okay, if the candles are forming below EMA4 and below the middle Bollinger Band, it makes it a risk to hold. Okay, so since the Nasdaq was under pressure, one way to play today was the technology bear 3 times, ticker symbol TECS, and as you can see, it's in a very nasty downtrend. This is a really ugly chart. It got a bounce today, but it's still well below EMA4 at 539. As long as candles are riding below EMA4, it signals that the bear or the bulls are or the bears are still in control. And so basically, it had the dead cat bounce today. It had the short cover rally, the bounce off the low, whatever you want to call it. But it has to get above EMA4 for that signal. Okay, yeah, it's ready to reverse. And technology is really cooling down. And then you'd be looking for a run up to EMA8 at 558. There is a gap between these two candles, so you could possibly see a run up there to 540 and fill that gap. But yeah, holding when it's below EMA4 does make it a risk to hold. It did form bullish piercing line reversal pattern today. Notice how the white candle, penetrated the candle preceding candle, and yeah, as you can see here, this is another strong reversal pattern. It just has to follow through. We'll see if it can follow through tomorrow. If you look at IWM here, you can see that this was probably the most beaten up of all the indices. It had this big, the big drop at 1.44%. RSI is back below 50, and then FASTO drop below 80. Those are all big red flags. Once they're above, the red crossing down back below 80. It needs to get back above that level. Notice that the very, very strong bullish, bearish engulfing reversal pattern. So that does signal downside risk. It did close back below the 50-day simple moving average. This is all, this isn't what you want to see. The other charts that I showed you. You don't want to see that 50-day simple moving average breaking. And then now tomorrow, you want to keep an eye on this 150, 150 level. If it drops below that 100-day simple moving average and below that middle Bollinger Band at 150, 179, that's going to be the big red flag. Notice it closed at low of day as well. And so they were really driving it down into the close, slightly, increase in volume. But yeah, keep an eye on 150, 150. A drop below would be the red flag. If it holds, then this is where it should bounce. Notice, look how hard they drove it down. Look at all those red candles into the close. This is the IWM 15-minute chart. It had the volume spike at the end. But yeah, they drove this down below the 100 and below the 200 simple moving averages. So the next key moving average is all the way down here at the 300 simple moving average at 151.71. It's actually below this 152 level. So yeah, this could come down here and test this support from down here on the 22nd. So that's the, it could be heading all the way down to this level if it keeps this trajectory. It closed below the lower Bollinger Band. There was this big spike. They might try to bounce this and run it back up. If the bounce is happening if it gets back above this 153.40, back above that 200 simple moving average. Okay, now let's look at TZA. When the small caps are under pressure, the small cap bear is one way to play it, and as you can see here, it had a big bounce today. So this was one of the better plays, up 4% for the bear ETFs. It ended up closing above that 50-day simple moving average, and so that's the key level to hold now at 1187. As you can see, it formed bullish engulfing reversal pattern as well. So another strong bullish reversal pattern for the bear ETFs, and then yeah, if it gets and it closed above EMA4. So it's two key levels. If it can stay above 1182, stay above that 50-day simple moving average, that'll signal it wants to head higher, and then it needs to get back above the middle Bollinger Band, above the 100 simple moving average at 1255. So that 1225, 1255, those are two big levels above. If you see it, at TZA stay above 12, that's going to be your clue, your signal that the bounce play is happening. Okay, if you're a bull on this play, you're looking for this type of movement. You're looking for the EMAs 4 and 8 to turn into support, and the candle candles getting above the middle Bollinger Band. Okay, now let's look at UVXY. Okay, so the you know, since the markets were under pressure, this was the big winner today. It closed up 19%. Yeah, it started off you know, kind of slow there. You know, they had a little pullback and then it took off running. As you can see, it bounced off of that 100-day simple moving average. We were looking for a possible bounce here, and so that you know that did happen. It did close back above that EMA 4 at 1566. That was very good, and it's hitting EMAs 8 and 13. You know, all it has to do is get back above that middle Bollinger Band at 1724, and then it could get an uptrend going again. Now, if you see it drop back below EMA 4 at 1566, that's going to be a signal that it's cooling down. Okay, that you know that this bounce isn't happening. It has to stay above that level to be a good play, and then once above that 1725 level, that's when you're like, okay, volatility's back. Okay, and then we'll be talking about a possible run back up into the 20s. Fail to break that 17 resistance zone or drop back below 1566, and definitely dropping below the 100 simple moving average at 14. Those are all signals that it's not happening. Okay, but if you see here, it formed a very strong reversal pattern today, bullish kicking, and so you know there was a gap up open and then a big run. So you know this was a strong move. It was a slight gap up open and then a big strong move today, and so yeah, it's just signaling more upside potential. For all these reversal patterns, they have to confirm. If you look here at the UVXY 15-minute chart, you can see here at the beginning of the day, you know, it had that big move, and then it pulled back, it hit that middle Bollinger Band, and it gave people a chance to enter that missed at the open. You know, the market makers were playing games. It was an interesting read. You know, it seemed like nobody was making money at first, and then finally it broke resistance and got above this 50 simple moving average, and that's when it really got cooking. And so yeah, congrats to everybody that made money on this today. Good job. It did break above this gap level, so it had you know, it had the gap down here. It broke above, and then it got above the 100 simple moving average. That was another strong move. You know, getting back up here, and then it closed above the 200 simple moving average into the close. So if it can stay above 16, that's the red line, that's going to be really bullish. And then you're looking at the 300 simple moving average at 1770 is the next big level to break. Yeah, so it was coming up and, you know, hitting the prior resistance levels from over here, and it was breaking through. And so yeah, it's going to be interesting to see if it can keep pushing higher. This was a really good move for UVXY. And then yeah, as you can see here, what else do we have? We have just a couple more that I wanted to show you. I wanted to show you, finish up with Intel here, and just show you how it's formed a bearish 3-gap ups reversal pattern. And so, you know, Intel was really pushing today. It closed up 1.6%. I know they were recommending it on CNBC. You know, the Nigerian guy was saying that this was a big load up here, giddy up. You know, he's telling people to buy at this level, and so I'm not sure about that. You know, this has formed a bearish engulfing or bearish. Where is that at? Nope, wrong pattern. It formed the bearish 3-gap ups reversal pattern, and so yeah, as we could see here, let me show it to you real quick. Yeah, this is the pattern that it formed today, and so this is you know, this is a signal that the chart's getting frothy. You know, there's multiple gap up opens in a row, and so you have 1 gap, 2 gap, 3 gaps, and so it's pushing higher, and then you have that upper wick where you have the pullback from high of day and showing the profit taking. It did close above the high close resistance level from January here. This is the double top level, so it needs to stay above the closing price here on January 26. If it can stay above that level, 49.75, that's going to signal it wants to push higher. If you see Intel drop below 49.75, that's going to be a signal it's cooling down, and then you could see these gaps below fill. Okay, a drop down to 48.52 would be where EMA 4 is at. You know, if it dropped down to EMA 8, it could fill these 2 unfilled gaps here. Okay, so just keep in mind it filled the jar back up to the double top level. Now it has to break out like Netflix and other stocks that have been able to, you know, an Amazon that hit that double top level and then pushed higher. And if it fails to do so, that's your signal that this is a temporary top. in my opinion, instead of chasing here after a multi-day run, I would think that the better thing to do would be wait for a pullback if you're looking to enter, because it looks like with the markets under pressure that there could be opportunities to reload at lower levels. Okay, thank you very much for viewing this video. If you'd like to learn more about charts and technical analysis, please come check us out at mychartcoach.com and our YouTube channel at mychartcoach.com. And then yeah, I'll post the link for the chat below the YouTube video. Okay, thanks for viewing. Appreciate it.